The Australian dollar, affectionately known as the Aussie, occupies a unique spot in global financial markets. As one of the most traded currencies, it is highly sensitive to global risk sentiment and the health of the commodities market, especially due to Australia's reliance on exports like coal, iron ore, and natural gas. However, questions about the currency's stability often arise, particularly in times of economic uncertainty or market volatility. Could the Aussie face a dramatic collapse? To assess this possibility, it's important to consider a range of factors, including domestic economic policies, geopolitical tensions, global financial trends, and shifts in global demand for commodities. By examining these interconnected elements, we can better understand the factors that shape the future of the Australian dollar and its ability to weather potential storms. Don't forget to subscribe as we break it down. The Australian dollar's journey began in 1966, replacing the Australian pound as the nation's currency. In 1983, it transitioned to a floating exchange rate, allowing market forces to dictate its value. This shift marked a turning point, aligning the Aussie dollar with Australia's evolving role as a global commodities powerhouse. The currency's fortunes are deeply intertwined with the country's status as a leading exporter of coal, iron ore, and liquefied natural gas. These resources drive substantial revenue, but also expose the currency to the volatility of global commodity markets. Additionally, the Australian dollar's performance is heavily influenced by economic conditions in China, its largest trading partner. As China's demand for resources rises and falls, so too does the value of the Aussie dollar, reflecting the interconnectedness of global trade and the pivotal role of commodities in Australia's economy. Currencies collapse under specific conditions, often resulting in severe economic turmoil. A collapse typically entails a significant loss of value compared to other currencies, which can trigger runaway inflation, erode purchasing power, and destabilize entire economies. The causes of such events are multifaceted, with economic mismanagement standing out as a primary driver. Poor fiscal policies, excessive debt, and uncontrolled inflation can all erode confidence in a currency's stability. Geopolitical instability also plays a crucial role. Wars, political unrest, or strained international relations can disrupt trade, diminish investor trust, and weaken a nation's economic foundations. External shocks, such as a global financial crisis or a sudden drop in key export prices, can further exacerbate vulnerabilities. In many cases, these factors converge to create a loss of investor confidence, leading to capital flight and a rapid devaluation of the currency. With these risks in mind, the question arises, could the Australian dollar face such a scenario? While the Aussie has historically shown resilience, it is not immune to global and domestic pressures. Examining Australia's economic structure, reliance on commodities, and exposure to external shocks provides insight into the factors that could influence its stability in the face of potential challenges. Australia's economic foundation offers a blend of strengths and vulnerabilities, painting a mixed picture of its financial resilience. At its core, the country's vast resource wealth drives substantial export revenues. As one of the world's leading exporters of coal, iron ore, and liquefied natural gas, Australia's economy heavily relies on the global commodities market. This resource-driven strength has been a key factor in supporting the Australian dollar's status as a stable and robust currency. Stable governance and a resilient banking system further solidify investor confidence. Australia's democratic institutions, strong rule of law, and sound regulatory frameworks ensure a stable environment for economic activity and investment. Its banks, well capitalized and effectively managed, have weathered global financial crises with remarkable stability, providing a dependable backbone for the nation's economy. Trade surpluses in recent years have played a critical role in bolstering the currency. These surpluses, driven by consistent demand for Australian resources, particularly from China, have provided a steady stream of foreign capital. China, as Australia's largest trading partner, accounts for a significant portion of its export revenues, highlighting the critical link between the two economies. However, vulnerabilities persist in Australia's economic framework. The nation's heavy reliance on commodity exports makes it highly sensitive to fluctuations in global market prices. When commodity prices dip, export revenues shrink, directly impacting economic growth and the Australian dollar's value. This dependence creates a cyclical vulnerability that ties the country's fortunes to volatile external forces. Domestically, high household debt levels remain a significant concern. Australian households are among the most indebted in the world, which increases their exposure to interest rate changes and economic downturns. This financial fragility is compounded by potential risks in the housing market, where years of rapid price growth have sparked fears of a bubble or sharp correction. Furthermore, the economy's limited diversification beyond mining and resources poses long-term challenges. As the global economy evolves and transitions toward technology and renewable energy, Australia's narrow economic base could struggle to adapt, underscoring the need for strategic diversification. China, Australia's largest trading partner, holds substantial influence over the currency's performance. Any slowdown in China's economic growth or deterioration in diplomatic relations can disrupt trade flows, reducing demand for Australian exports and weakening the currency. This close economic relationship highlights the Aussie dollar's sensitivity to shifts in China's policies and economic health. The Australian dollar's strong correlation with global commodity prices further underscores its vulnerability. During downturns in commodity markets, such as the crash of 2014 to 2016, the Aussie dollar faced significant pressure, losing over 30% of its value against the US dollar. This sharp decline illustrated the risks associated with Australia's reliance on resource exports and the currency's status as a commodity-linked asset. Such external dependencies underscore the need for economic diversification to build greater resilience against global shocks. Global financial conditions further complicate the economic picture, particularly during times of crisis. Historical events, such as the 2008 Great Recession and the COVID-19 pandemic, highlight how investors tend to flock to safe haven currencies like the US dollar in periods of uncertainty. This flight to safety behavior often leads to a decline in risk-sensitive currencies, such as the Australian dollar. With Australia being a commodity exporting nation, its currency is highly sensitive to shifts in global risk sentiment and economic outlook. During global downturns or geopolitical tensions, investors may view the Australian dollar as more vulnerable compared to other currencies. The continued presence of global uncertainties, such as trade disputes, inflation concerns, or geopolitical instability, could amplify these trends, further exerting downward pressure on Australia's currency. In this environment, the Australian dollar may struggle to maintain strength or stability. Domestically, the Reserve Bank of Australia faces a delicate balancing act between promoting economic growth and controlling inflation. In an environment of rising interest rates, the RBA aims to curb inflation, but this comes with potential risks, such as slowing economic activity and increasing financial strain on households already burdened by high levels of debt. The challenge is particularly acute for households with variable rate loans, who may face higher repayment costs, potentially dampening consumer spending and overall economic momentum. Additionally, Australia is grappling with the emerging impacts of climate change. The country's economy is highly vulnerable to extreme weather events, such as droughts, floods, and bushfires, which disrupt agriculture, infrastructure, and natural resources. Furthermore, the global transition toward renewable energy presents both risks and opportunities for Australia's resource-based economy. As the demand for coal and liquefied natural gas declines in favor of cleaner, sustainable alternatives, Australia must adapt to remain competitive. This includes investing in renewable energy technologies, diversifying its export base, and managing the economic transition in regions heavily reliant on fossil fuels. The success of these efforts will play a critical role in shaping Australia's economic future amid both domestic and global challenges. Population growth, driven by immigration, has historically been a pillar of Australia's economic expansion. Any changes to immigration policies could have far-reaching effects on economic activity and, by extension, the currency's stability. Speculative scenarios introduce additional layers of complexity and intrigue to the discussion on Australia's economic future. For instance, a prolonged collapse in commodity prices could significantly reduce export revenues, a critical component of Australia's economy. This scenario could hurt national income and government budgets, leading to tighter fiscal conditions. Escalating geopolitical tensions with China, one of Australia's largest trading partners, could trigger a trade war, further disrupting exports and economic stability. Similarly, a sharp correction in property prices, which have been a significant driver of wealth and investment in Australia, might destabilize the financial system, particularly if it leads to increased household debt defaults and a tightening of credit. A global recession could also accelerate capital flight as investors seek the safety of more stable currencies, such as the US dollar, further undermining the value of the Australian dollar. While these scenarios are plausible, they do not necessarily spell economic collapse. Australia's diversified economy, strong financial institutions, and historical resilience in the face of global shocks provide a foundation that could help weather such challenges. The country's ability to adapt to changing global conditions, invest in new industries, and implement policy adjustments will play a critical role in navigating these risks. Several mitigating factors serve to shield the Australian dollar from a catastrophic decline, even in the face of external pressures. One key factor is Australia's floating exchange rate, which allows the currency to absorb external shocks, such as shifts in global commodity prices or geopolitical tensions, without causing extreme imbalances. This flexibility helps prevent large-scale disruptions in the economy that might otherwise undermine the value of the Australian dollar. Additionally, the Reserve Bank of Australia's substantial foreign exchange reserves provide an added layer of stability. These reserves enable the central bank to intervene in currency markets if necessary, stabilizing the Australian dollar and calming market fears during periods of volatility. Australia's strong track record of sound economic management also plays a crucial role in fostering global confidence. A reputation for responsible fiscal policies, low public debt, and consistent economic growth helps attract international investment, supporting the currency. Furthermore, Australia's ongoing efforts to diversify its economy, particularly through investments in renewable energy and technology, offer hope for a more resilient future. As demand for traditional resources like coal and wanes, these forward-looking industries could drive long-term growth and ensure that the Australian economy remains competitive and adaptable to changing global trends. History offers valuable lessons in understanding the resilience of the Australian dollar, as the currency has faced significant challenges in the past but has consistently avoided collapse. One key example is the 1986 Banana Republic crisis, where Australia's economic struggles were marked by high inflation, debt, and political instability. However, structural reforms and a subsequent global economic recovery helped stabilize the currency, reinforcing the importance of policy adjustments in times of crisis. Similarly, during the Asian financial crisis of 1997 and the global financial crisis of 2008, the Australian dollar experienced sharp volatility, but it ultimately emerged intact. This resilience can be attributed to Australia's robust economic fundamentals, including its strong banking system, diversified export base, and demand for resources. Despite external shocks, these factors have consistently provided a stabilizing effect, enabling the Australian dollar to weather turbulent periods and maintain its position as a key player in global markets. Looking ahead, Australia's ability to navigate global and domestic challenges will determine the currency's resilience. Investments in climate-resilient infrastructure and a low-carbon economy are essential to future-proof the nation against environmental risks. Strengthening trade relations beyond China, particularly with emerging markets like India, Southeast Asia, and Europe, can help reduce Australia's economic vulnerabilities. By diversifying its trade partners, Australia can mitigate the risks associated with over-reliance on one country and better shield itself from geopolitical tensions or market fluctuations. In parallel, structural reforms aimed at boosting productivity will be crucial for sustaining long-term growth and currency stability. Investments in education, innovation, and infrastructure can improve the economy's competitiveness, foster new industries, and support a highly skilled workforce. By enhancing productivity across sectors, Australia can drive sustainable economic growth while maintaining a stable Australian dollar. These combined efforts to expand trade ties and modernize the economy provide a pathway for Australia to navigate global challenges and ensure resilience in the face of future uncertainties. The Australian dollar's future ultimately hinges on the interplay between global forces and domestic policy decisions, and while the currency may experience turbulence due to external shocks or market shifts, a full-scale collapse appears unlikely. Australia's robust institutions, strong economic fundamentals, and strategic reforms act as a buffer against extreme scenarios. These factors, including sound fiscal management and efforts to diversify the economy, provide stability even in uncertain times. However, policymakers must remain vigilant and proactive, adapting to evolving global conditions. By fostering economic growth through innovation, investing in education and infrastructure, and strengthening trade relations with diverse markets, they can ensure that the Australian dollar remains a symbol of resilience rather than vulnerability. Careful, forward-thinking decisions will be essential to maintaining confidence in the currency and safeguarding Australia's economic future. In the grand narrative of global currencies, the Australian dollar's journey encapsulates the opportunities and challenges faced by a resource-rich, open economy. Its fluctuations are shaped by external factors, such as commodity prices and global demand, as well as domestic policies and economic reforms. The Aussie dollar's resilience in the face of these pressures highlights the adaptability of Australia's economy, driven by a diverse range of industries and strong financial institutions. While challenges remain, particularly in an increasingly volatile global environment, the Australian dollar continues to play a vital role in international finance. Its position as a widely traded currency reflects Australia's importance in global trade and investment, and its future will depend on how the country navigates both domestic reforms and international trends. The story of the Australian dollar is far from over, and its evolution will remain a key element in the broader financial landscape. The journey is a testament to the resilience and adaptability of Australia's economy in the face of global challenges. While it has faced volatility, its strong fundamentals and strategic reforms have allowed it to remain a vital player in international finance. The lessons from history remind us that even in tough times, the right policies can help stabilize and strengthen the currency. If you enjoyed this deep dive, don't forget to like, subscribe, and hit the notification bell for more economic insights. See you in the next video.